Hello, everybody. Thank you so much for coming to our first time home buyer seminar. I'd like to invite my guests. Come on, Frank. So we are here to talk with you and to encourage you to buy your first home and open up and explain as much as we can about the mysteries of buying your first home. I'm gonna talk a little bit about myself, and I'm gonna let Frank introduce him, and we go from there, okay? So I am a realtor over now 27 years. I started when I was 21 years old in the real estate world, and since then I never stopped. I love real estate. I do it for love. It's like something that makes me very happy. It's to help people do not pay other people's mortgage, to be rich, because we can do it. Everybody can do it. If I did it, everyone can do it. So I'm going to explain a little bit about the market of Ottawa, what's going on with the market. And so I live in Ottawa over 20 years. I'm from Brazil. I moved here 19 years old, 19 years in the back, and I got my license here in Canada over 5 years. So that's what I'm saying. Everything about the real estate, we learn every day. Every day things are changing. It's not the same. If I'm doing a market analysis for a client that's going to sell a property, I have to do it weekly because it's changing weekly. It's not monthly anymore. Even sometimes days. In one day to other, things can change a lot. Okay? So I'm going to let you talk a little bit about yourself too.
Okay. Yeah.
And then we'll start seminar.
All right, and my name is FranK Abouchakra. It's actually François Abouchakra, but I go with Frank. And I'm a TMG agent. I've been in finance since about 2001 and recently been involved with TMG since about 2019. Not only do I help clients with, their mortgage needs, whether it's for a first-time home buyer or someone that's actually acquiring requiring commercial financing. So my ability is to do everything. I'm L2, which means that I can do regular mortgages, but I can also deal with B lenders, private mortgages, as well as credit unions out there. I think, to get a pulse on the market in Ottawa, I have an advantage as well. I've got the opportunity of working with incredible people like Roseli, but I myself have purchased several homes in Ottawa, and I'm a real estate investor myself. So I think the combination of the two and the collaboration with great people, we're able to offer a service to our clients that I would say is unmatched. And we want you guys to know exactly what's going on in the market and make sure that you get the right product as well, right? Yeah. So I'm looking forward to this, and we'll give you a lot of information today.
That's good. Thank you so much, Frank. So I'm going to go very quick to the Ottawa market, and so if you have any questions, you can stop at any time. Okay, you can ask. So let's go there. So here we can see the total number of homes sold through MLS in March was 165. The benchmark is around 636, 700, but this includes the tall homes as well. So, but today for a single home is around 750, tall home around $630,000. Per property. And when we refer to the market, the Ottawa market, that doesn't mean a specific market, a specific neighborhood. It's all over, from Cornwall, Empire, Carrington Place, Rockland. It's everything together. So that's why this is a median price that we have today, okay? The average price was $682,078 because, you know what, the price is too good to buy. The same property, I explain to my clients, the same property that you buy today, you're paying $650, in 2021 was $730,000. So we have this graphic in here, where show you a little bit about what's going on. Let me see if this one is a thing. Yeah, it is. So we can show a little bit how the price goes, and always repeat, you see? And what's going on with Ottawa is always going up. So here in let me say in July 2020, when there was the lockdown, no one can buy anything in between 2019 to July. You see how things started going up and up. This is the average. Here come down where they said about everybody's going to be locked down. The price went down. No one knew what's going on, and it started another lockdown. We cannot go to anywhere. That was around between January 21. And then the price started to rise up. When people started going up, get out of the house, and the price in 2021 went this high. And then it keeps going until it goes to the peak, where I said the same townhome that we're buying today for 600 something was sold for almost for $800,000. We held the home selling for that price. And that was in 2022. Up to January was the peak of the price. I'm gonna put it down home because it's first time home buyers where we are more here talking about the first time home buyer. So the highest price was here in January 22 until February, March, where it was this high. And then in July 2022, the government announced the increase of the rates and then drop. We have a huge drop, July, August, more here, you see, the drop, but it was. And then it started going down and down until January 24, it's still falling, and then it started going up again. In July, it started going up and then fall again because no one knows what's going on with the rates, and then now it's raising again. So that's what I was telling. Now, Frank is going to talk better about that because about the rates and everything. Let's say now is the best time for you to buy a house. Why? The 2% is not going to come back anymore. That was like something, like everybody believes that. Is something that happened because of an emergency. You're not going to have that. Okay, people say, oh, I'm going to wait for the rates to go lower. Okay, when the rates go lower, the price is going to go high because all the people is going to start to buy again, and we don't have inventory for everybody. There is not enough homes for everybody. So then it's going to start the rush again, and people is going to start to buy house and bid war. What is start going on? Because we still don't have enough properties. So now, like here I can say about the, oops, let me go back again, let me go here. So active listings in 2020, we have 1412, 2021, 907 active listings and thousands of people looking for properties. That's why the price went high. Then in 2022, went for 105 because everybody wanted to put the house for sale. I'm gonna get the best price of my property. And then 2023, this much because people said, okay, I'm gonna put my house for sale now because I don't have money to pay my mortgage. And that's where the house went, more homes in the market. More homes in the market in 2024 because people cannot afford, most of people cannot afford. And what is going on is, even if 2,500 active listings today, we still don't have enough inventory. Believe, we are working right back with multiple offers. Sometimes 3, 4, of course it's not being like 2021 when it was like $100,000 more for the price of the property, but people are paying more. And sometimes, like, even the asking price, we get like less than the asking price in multiple offers. So because there's not much property out there, like especially for first-time home buyers, because there's more people entering the market, right? So, and I work a lot with first-time home buyers too. I am like an investor as well, and now I'm entering the building world because I have a lot of people that wants to build something, to buy something and build something. So, and one thing that I'll stop with you, when we're doing something, do your best. I'm not gonna go instantly with people without doing myself and know how things is, like dominate the market. Like there's a lot of realtors out there, there's a lot of mortgage brokers out there. Like Frank was saying about his quality. Sometimes people say, oh, I have my friend, he's a realtor. What is the experience? Is the biggest asset you have in your life. You're gonna put in the hand of someone that doesn't know what they are doing because it's your friend. You can become the worst enemies ever. So sometimes it's not that good to put it like a friend in the middle when you're doing some business so big like this, because we don't want to risk your entire your biggest asset in the hand of someone that is not specialized. And being a realtor, like, is not only go there, take the license, which most people think. It's studying all the time studying. It's the same as mortgage broker. A lot of people take the license of mortgage broker and they can just work with one lender, right, Frank?
Absolutely.
Or cannot work with private lender, giving other solutions. Because there's always a way for you to buy your property. Like it depends the person you are working with, because you need to work as a team. As me as realtor, a lot of people come to me first and, Rose, I want to buy a property. Can you help me? How much are you approved? I don't know. Then I always explain, you need to go to the cash man. You need to go to the cash man because the mortgage broker is going to tell us how much is going to be the amount we are going to use to go shopping and have some fun and buy your dream home. So I think that's all for me. You have information there if you have any questions, okay? Any questions so far? Okay, so Frank, I leave it this for you. Thank you, Becky, for doing that.
All right. Okay. So I'm going to give you as much information as I can on what's been going on in the market, but I don't want to just talk about what's happening right now. I'm doing you disservice by doing that, by just focusing in on a few months. So, and I like the fact that you actually touched on something, Rose, going back to 2020 and 2021. And one thing that I could tell you, and one thing that I could remember, is the CEO of RBC. I actually saved the recording. I'd be more than happy to send it to any one of you, where he was basically saying, we got to come up with a solution. The housing market was going absolutely insane. It was becoming very unaffordable for first-time home buyers, people that are limited in income. And we still have the same problems, believe it or not, today in one way or another. So what ended up happening is the rates went up faster than we could possibly imagine. They've never really gone up as they did before, but it actually did the job. It slowed the market right down, right? So we also have inflation to contend with. So the Bank of Canada wants inflation to be at 2%. That's their goal. So whenever we look at inflation, inflation has been coming down. Anytime inflation has gone up, you'll find that the rates did go up as well. So in March, inflation was at 2.8%, and what we all expected, the last rate announcement, is that rates will go down a little bit, not variable rates. So I really want to make a distinction between those two, okay? So your variable rate, that's the rate of Canada announcement that we keep hearing about, right? But what we have to remember as well is there's the fixed rates as well. And those, they're not really tied, they are, but they're not directly tied. So when we look at fixed rates, and you know, we did a couple of these, I believe around the same time, maybe in May of last year, and everything that Rose and I spoke about to everybody that joined us on that live has actually been coming true, right? So last year, around this time, our rates were about 50 basis points lower than they are today. So when I talk about basis points, 50 basis points is 0.5%, okay? So what we saw soon after that, shortly after May, is the rates went up, and they were in the mid-5s to high-5s, even for first-time home buyers. Now, as of the last rate announcement, our rates were around 4.99. I was able to get some of my clients about 4.89, 4.79, and when the U.S. came out, and you know, basically their numbers were not looking very good. Their inflation numbers were going up. That caused our interest rates, our fixed rates to rise. So remember, they held the Bank of Canada rate, but the fixed rates are the ones that kind of just elevated a little bit. So what I appreciate about being a mortgage broker and not working for a bank is this. We have many, many lenders to choose from. So one of my favorite lenders to submit to, that's been absolutely incredible to deal with, which is First National. They left their rate right now at 4.99 when everybody else has raised it to about 5.14. And again, I'm going to explain to you guys when I discuss these rates, these are high ratio rates. By the time we're done this, you'll understand exactly what I'm talking about, okay? So in terms of, what's impacting the market? What was impacting the market back in 2020 and 2021 is still existent right now. So yes, the rates have gone up, and that kind of slows the economy down a little bit, or slows the market down a little bit, but what does not, or what has not changed, is immigration. We have a lot of immigrants coming in. The supply of homes, like Roseli just pointed out, has increased a little bit, but believe it or not, it's not enough. One, it's not enough to give you choice. And then whenever we talk about these houses, it's all mixture of homes in the marketplace. And it's not just townhomes. So when we have the general population in Canada, the demand is high, the supply is low, that's going to keep the prices up. So when people say, we want to wait until interest rates go down, they're doing themselves a disservice. As soon as rates begin to come down, like we saw last year, around May, the market started going nuts, right? That's what people are waiting for. Arrears, believe it or not, even though people are struggling, a lot of people in Canada are struggling, and the government is trying to come out with programs to help them out. The banks are trying to come out with programs to help them out, but it's never enough. Believe it or not, arrears are quite low, and we're happy to hear that. The government has come out with some incentives right now. They did take away the first-time homebuyer program, so that's gone. And to be honest with you, from my perspective, it wasn't a great program. It didn't help a lot of people out, okay? And we'll talk about some of the changes. The rates will decline, by the way, so that's what everybody's waiting for. If you listen to the Bank of Canada and all the talks that are going on, they're actually split. Some want to keep the rates the same and some want to reduce the rates. There's a lot more than just simply buying homes in the economy, and it could be detrimental to lower rates too fast. So once they start lowering rates, and they will eventually, they're going to have to lower the rates gradually, okay? So in terms of the market, what we see right now, you're gonna see a lot of changes. The spring market starts. Once we see some rates coming down, the demand is going to increase, right? And I always tell people, look, we don't have to complicate things. It's a simple economics, supply and demand. When the demand is high, the supply is low, the prices are going to increase. Now, in Canada, we don't have enough housing. We need to build a lot more homes, and if we have to depend on governments, I'm sorry, it's not going to happen. So the supply, we're gonna have supply issues for quite some time into the future, right? Now, let's talk about the actual, what you need to know as first-time home buyers. Down payment, okay? I want to explain the down payment. So your down payment requirements for the first $500,000 is 5%. So up to that $500,000 mark, your down payment is 5%. When you increase the home price, $500,000 to just under $1 million, that difference only is at 10%. For example, if you're buying a $600,000 home, your first $500,000 will be at 5%. That extra $100,000 is going to be at 10%. Your required down payment would be 6.9%. Okay? $1 million or more, 20% is required. And again, I'm going to expand into that as well. This would not be a high ratio mortgage as in the first example, or the down payment. Now, down payment, when we talk about down payment, of course you can save for down payments, but in today's economy, believe it or not, a lot of parents are gifting their children the down payment. And we see an increase in that. We have seen an increase over the years, and that's where a lot of down payments are coming from. So your down payments can be gifted. So if a family member, an immediate family member, mother, father, sibling is giving you the money, then all we have to do is show that they've given you the money, request a gift letter that's provided by me. You will complete it, parents will sign, you will sign it, and we will submit that to the lender. And that's all you need to know. And since you deal with a lot of Brazilians, Rose, if the money's coming in from Brazil, I deal with a lot of Brazilian clients as well. You can actually have those funds coming in from Brazil. It's not an issue at all. And we can discuss, and I will let you know exactly what's required. The requirements are very simple. Nothing is complicated in this whole process. RSPs, so there has been some changes, right, recently. And I think this is a very positive change. I don't know how much it's going to help people because you still got to come up with the money. But what the government has actually allowed is, it used to be up to $60,000 for, up to $35,000 for an individual. Now what they have done is they have increased it to $60,000. So you can contribute into your RSPs, and please remember that they have to be in that account for 90 days before you can draw that money out. And for a couple, it's gone from $70,000 to $120,000. And this is, of course, as per the 2024 budget. So withdrawals made between January 1st and December 31st, 2025 will have 5 years to start paying instead of 2 years. So I think that's an advantage as
good.
well.
Yeah.
It's excellent,
Oh my
right?
God, that's
It's a step forward. I don't know if everybody's going to be able to take advantage of it, but at least you can.
So if someone wants to buy a property, example, like in 5 years start to pay, or I'm gonna buy another property in 4 years.
Yes.
So I can still use that money that I put in there and start paying.
Yeah, after 4 years, absolutely. Thank you for bringing that up. So you can qualify, and if you need to do that, please let's have a discussion on that. I don't want to touch too much on the RSPs. The contribution is great, it's there, it's to save you some money on taxes and so on, and we can discuss that in detail, and I can also send people information by email to go a little bit further. Whenever you're ready to start shopping, Rose, I think you touched on this. It's very important before anybody goes out and starts talking to a real estate agent is that you are prepared. As a buyer, you want to do your homework. One, you want to know what you qualify for, right? There's no point in shopping for a $750,000 home when your income qualifies you for a $450,000 home. And I find that when I talk to clients, you know, they wonder, how much do I qualify for? They don't even know, and that's perfectly normal. But once we have a discussion and I'm able to talk to them, I'm able to communicate with them, by the time we're done our first conversation, chances are they're going to know exactly how much they qualify for, and that gives you a sense of freedom. So then, at that point, you will contact your real estate agent and say, I'm ready to go start shopping, and the fun begins, right? So you definitely want to know your purchasing power, and if you are out and you're ready to start shopping, we can get you what's called a rate hold. So suppose we get a rate hold today, right? It's a rate climate. Nobody really knows what's going on. We hope that the rates go down, but guess what? Like we just illustrated earlier, rates do tend to go up. So we'll get you a rate hold, we'll submit the application to the lender. That lender is going to provide you with a rate, and that rate is good for 90 days, 120 days, and some lenders are longer than that. Now, you start shopping for a home. If by the time we submit your deal, the rates have gone down with a different lender, we're going to get you the lower rate with a different lender. If the rates go up, your rate hold stands. So you've got that rate. And by the way, what I do for my clients is, as you near closing, the closing date is the date you're going to take possession of your home. Your home becomes yours. I will actually, about 10 days prior, up to a week prior, I'm always going to be checking the rates with that lender. And if the rates have gone down, you'll end up getting the lower rate as well, right? So we want to guarantee you the best rate. Definitely run the numbers. And that's something that I really, it's amazing how people react to just knowing. Right?
Clarity's power, right? Clarity's power.
Absolutely. It gives you tremendous power. So knowing the numbers, you want to know what your realistic budget is, and that way you can go out shopping and knowing exactly what you qualify for. There's some costs that you want to budget in as well. So you want to make sure that you have your closing costs. So as far as the lender is concerned, what we have to show the lender above and beyond your down payment is that you have 1.5% of the closing cost. That's all the lender wants to see, right? And if I could go back a little bit, with down payment, your down payment is required to be in your account for 3 months prior. In the event it's not, anything over $2,000 we have to source. So we have to tell the lender, where did that money come from, okay? Working with a realtor, I do want to touch on something that you said, Rose, because I see a lot of clients and I deal with a lot of different realtors. So my clients are dealing with a lot of different realtors. Working with the right realtor is going to be the difference between you being extremely confused and not buying a home, or working with the right realtor that sits down with you, that's going to ask you a lot of questions, find out exactly what your wants and needs are, and be able to show you homes that meet your needs, right? Whereas if you are with a real estate agent that's maybe a little bit green, they just cause, and I'm not saying everybody, some people are great, but you really want to do your homework and deal with someone that's knowledgeable, that knows the market well, so confusion doesn't arise, because that that becomes a problem, and sometimes people end up buying the wrong home, right? All right, so qualifying. Whether you're salaried or self-employed, very, very quickly. For salaried, it's relatively easy. What we ask for is your last 2 years T4s, your most recent pay stub, and your employment letter. So pretty straightforward, okay? I'm gonna ask you for that. We wanna verify that information. I can easily pre-qualify someone without submitting the documents to a lender, and we can give you the assurance that you're actually going to be approved, right? And I love it when the individual takes that step, because again, it's not guessing anymore. Is credit score important? Yes, it is. You want your credit score to be over 680. So people tell me, well, Frank, when should I start? Is it just before I start shopping? I say absolutely not. You may want to start ahead of time, maybe 1 year, 2 years, even 3 years ahead of time. And here's why. If your credit score is 620, I can help you correct that. I have sometimes taken a client, and in about a month, I don't want to say less than a month, in about a month, I'm able to increase the credit score by 50 points. And that's the difference between an approval or a decline. Keeping in mind that I do deal with a wide range of lenders, but I just want to concentrate again on first-time home buyers who's putting less than 20% down for the time being. The stress test I'm going to be able to explain to you, but let's talk about co-signers. So parents can co-sign. A co-signer is going to go on title, so you'll be on title for the home, but your co-signer is going to be on title. However, a guarantor, so if a parent is a guarantor and we're using them to qualify the deal, we're using their income, a guarantor does not go on title, okay? Which is always helpful. And we're going to discuss the stress test in just a moment. So the stress test, basically, what it's doing, it's ensuring that you can comfortably make your payments if the rates go up. So even when the rates were at 2%, like Rose suggested before, we were qualifying everybody at 5.25. So that's why not a lot of people are in trouble. A lot of people can still afford their mortgages even though the mortgage payments have gone up. It's because of that stress test. So the way we stress test is to qualify on a new mortgage, of course, higher up, the qualifying rate of 5.25, or your mortgage contract interest rate plus 2%, which is, the latter is the one that we're mostly using now, because if your rate is 499, you're going to qualify 2% higher. Your qualifying is at 699. Your rate that you're paying is 499. Does that make sense? Good. All right. Mortgage default insurance, very quickly, guys. If it's an insured mortgage is less than 20% down, you're amortizing that mortgage over 25 years, you're required to take mortgage default insurance. The way it works is if you're putting 5% down above and beyond, so what's included in your payment is at 4%. So when I'm talking to clients, sometimes they'll say, well, what happens if I put 10% down? Is that going to impact the payment? And I'm able to show them. I don't mind sharing my screen, but if you were to put 10% down, your mortgage default insurance goes down to 3.1%. At 15% down, your mortgage default insurance is 2.8%. And once you're at 20%, that's not required, and now it becomes an insurable mortgage. Okay?
Example, $500,000 in those percentage.
Yes.
How much is gonna be the amount?
So at $500,000, if you're putting 5% down, which is $25,000, you're gonna add 4% to the remaining amount. So
$20,000 is the $20,000 is insurance.
$25,000 would be your down payment. 4% would be your insurance cost.
Okay, off the $5,000, the $25,000.
No, thank you for that. I'm glad you're asking that question. 4% would be on a financed amount.
Okay, in the finance amount.
Yes. Okay, so very good question. I appreciate that. And what that's basically doing is it's protecting the lender. In the event that you're not able to pay, you know, they take the proper steps and they're not losing out on that mortgage. And that's why, by the way, you actually get the best rates. So when I'm saying 499 or 489, which is a high ratio mortgage, that you're getting the best rate, it's because you're giving security to the lender, they're protected, and therefore they give you the best rate.
Are those rates like fixed? Like let's
Yes.
say you put, okay, so
Yeah.
it'll be for the rest of your mortgage, even if you decide to pay off your mortgage at a certain point.
Yeah, that's right.
Okay.
At the beginning, right? Because you're
Yeah.
getting this at the beginning.
Okay.
Yeah. So insured, 5 to 20% down payment. And that's how I want to really break it down for everybody. Insurable. So insured, it's still 25-year amortization, right? Your insurable is 20% down payment or more. You're still 25-year amortization. And when it's insurable, you are not paying the mortgage default insurance. The lender is paying the mortgage default insurance. And sometimes, by the way, we see the rates are just a little bit higher because you're not paying the insurance. But believe it or not, some lenders will actually match those rates. And uninsured is a conventional mortgage, so you definitely put in 20% down or more. You're typically refinancing, it's a rental property, 30-year amortization. Now, I wanted to put this down at the bottom. Be wary of ultra-low online rates. When it comes down to it, you are not getting that rate. And by the way, when clients come to me, there's what's called a no-frills mortgage. So if you're not going to make any changes, you're going to stick to that mortgage, you're not making any additional payments, you're really locked in. It doesn't have all the bells and whistles. We can get you a lower mortgage. Believe it or not, when I actually explain that to the client versus just a regular mortgage with lots of flexibility, most clients will say, you know what, that's the one I want. I don't want the one with no frills because things change, especially first-time home buyers, right? You might change your mind in 3 years. You may want to move to a bigger home, right? The new budget, and this is a major change that I wanted to discuss with everybody today. Look, I'm not going to go into, there's a lot of emotions out there when, you know, one of the changes is that on an insured mortgage, you can actually finance a brand new home. So you're buying a home from a builder and you can finance it over, or you can amortize it over 30 years. It used to be 25 years. So it gives you a little bit more buying power. And I'm going to show you an example in just a moment, right? And some people would say, well, that should have been right across the board. And then you've got some people saying, well, I think it was great that a young person that's buying a home is going to be able to pay off the home in approximately 25 years. Now it's going to take him 30 years. So people have a problem with that. The fact is, we want it to be a little bit more affordable. Where I look at this is, are builders going to take advantage of this and increase their prices? Well, the market has to dictate that as well, right? Supply and demand. People don't really have to buy. And that's, you know, something that I want to discuss with my clients as well. August 1st, 2024, this becomes accessible, less than 20% down payment, and a max of 1 million. So we want to be under $1 million, 999,999, for example. Mortgage decisions, so rates, whether you take a fixed or a variable. In 2020, 2021, when the rates were great, a lot of people shifted to a variable rate mortgage. We were doing about 65 to 67% of mortgages were actually going to variable. I switched a lot of my fixed rate mortgages to a variable rate mortgage, and I've kept them there. You know, some people were able to move into a fixed rate, chose the right timing, and we stayed on top of things and switched them to a fixed rate. So having that discussion from the beginning, you know, this is something that I want to discuss with my clients. If you want your payment to be fixed and you don't want it to change, you're probably going to take a fixed rate mortgage, right? And if you are one of those people, like I have a few people right now that would say, you know what, they know the market, they say the rates are going to go down. I want a variable rate mortgage. So they are betting that the rates will go down, and if they're holding a 5-year mortgage, within that 5 years, the rates should go down and they will capitalize on the low rates. By the way, if you take a variable rate mortgage, you can actually lock in any time. You can't do it the other way around, but you can lock it in at any time. I'm gonna just speed up a little bit. I wanted to give you this example. If we were doing a purchase of a $500,000 home, okay, and your down payment is $25,000 or 5%, like I mentioned earlier, your 25-year amortization, your payment is going to be $28.70 and 32 cents. That's monthly. If you want that to be bi-weekly, multiply that by 12, divided by 26. That's going to give you bi-weekly payment. That same home, same down payment, amortized. So now it's a brand new home. You're buying that home at $500,000, 5% down. Your payment is $26.33.48. So that's the difference between the two, right? And you have to determine, is it something that's, it's going to give you about 3-4% buying power, right? That might be a difference between you buying a home or not buying a home. So at least it gives you some choice. And I wanted to give you an example of a $650,000 home. So your down payment would be $40,000 or 6.15%. Your rate, I'm using the same rate of 4.99, right? This is for illustration purposes only. 25-year AM, $36.86 and 24 cents, your monthly. Over 30 years, it's about, what is it?
$200. $200.
Yeah, a little more than $200
$300,
difference,
yeah,
right?
Yeah, $300.
Go ahead.
If you buy a home that has multi-rentals inside, like we were kind of speaking about, does the down payment go down or does the rate go down?
Neither. What's going to happen? Very good question, and that's coming up, by the way. So if you're buying, the question is if you're buying a home with a rental unit, correct? So your purchase price determines how much down payment, or you determine how much, so we'll tell you the minimum down payments. But what ends up happening with that rental unit is that you're going to qualify for more home, right? Because we can use the income from that rental unit. And sometimes it's a trick that I use, and I'll call Rose and say, Rose, if you can find a home with a basement unit, that client may qualify for $380,000. Well, now they're going to qualify for $450,000, and the rental unit is going to offset their mortgage payment, right? Make it more affordable. Believe it or not, a lot of people are doing that. When I started investing in real estate, that's exactly what I was doing. I was actually buying homes. Typically older homes, they had a side entrance. I would turn the basement unit into a rental, live upstairs, rent downstairs. And when you went to sell that unit, by the way, or that home, well, it's an investment property and the values go up. So very smart, yeah. There you go. So you beat me to it. So yes, rentals are fantastic. So whether you're buying a single unit, a duplex, a triplex, or a fourplex, we can submit it to the same lender. Your qualifications qualify the same way as long as you're moving into one of those units, right? You can put less than 20% down, because typically when you're buying rental, you have to put 20% down, right? There's no choice. But if you're moving into it, we can still apply for a high ratio mortgage, use the income from the other 3 units or from the other unit, and you would qualify for a higher amount based on your income.
With the insurance and the mortgage you were talking about earlier, if
Yep.
you're doing a rental, would it be higher because there's more variation?
No, not at all, no. It's based on the amount that you're financing.
Okay.
So if you're putting 5% down, it's still gonna be 4% added to the price, right? Yeah. Okay, so the mortgage process, a lot of people come to me and they're stressing out, and I say, please don't stress out. We're a team, right? I'm gonna hold your hand. We're gonna make this happen, and I don't want you to be stressed out. So how do I help with that? By answering your calls. Look, you can deal with a bank. Guys, a bank has a duty to do what's best for the bank and not for the client. And I think you'll hear that from just about everybody. We still deal with banks, but we also deal with monoline lenders. Monoline lenders only offer mortgages. So they're not gonna offer you a credit card, not all of them anyway. Some of them will have a line of credit, a HELOC, something along those lines. But that's the benefit of dealing with us. So when you call, I'm going to answer your call. I think Rose can attest to this. All of our clients can attest to this. If a client calls me, I'm not answering the call if I'm on the line or dealing with a client, but immediately after, I personally want to make sure that I respond to them, because I know that first-time home buyers especially get nervous. They want the answers. I don't want them waiting until the next day to get that response. So I tend to act a lot quicker, especially when it's a first-time home buyer. Because I can imagine, once upon a time, I was a first-time home buyer. So let's go through the process. The mortgage application, usually what I do is, I'm gonna introduce myself to the client. You know, Roseli will send the email introducing us. I'll introduce myself and say, you know, let's meet over Zoom or in person. Do me a favor and complete the application. Just give me the basics. I'm gonna complete the rest with you. So we're gonna get the mortgage application. I'm able to share my screen with you if it's on Zoom. And then I can actually show you how you qualify, give you a greater understanding. It's not a, you know, rapid questions. It's a conversation that takes place. I really get to know the client in depth and their needs and so on by just taking the application and the questions. The client is not bombarded with questions, right? So we'll go through the application process. By the time we're done, you'll know how much you qualify for based on the information that you gave me. So now I gotta verify that information. What I'm going to do is gather all the documents for income and down payment and just make sure that the client understands so it goes very smoothly. And I'll collect the documents up front. We know most mortgage agents out there will know exactly what the lender's looking for. And I don't want to keep asking you for documents after the fact. Not that it doesn't happen, sometimes it does. But I want to be able to gather all the documents early on. I want to be able to verify all the information. And that way I can contact Rose, contact the client and say, hey, go out and shop for a $550,000 home. That's what you qualify for, right? Now, if we want a rate hold, the package is going to go to the lender, right? And some lenders, they don't need the package, they'll just give you a rate hold. But let's assume that the deal is finalized and we're going to submit to the lender for an approval. So that application goes in, all the documents go in, the lender's going to respond with an approval, okay? So you're going to get what's called a commitment letter. And on that commitment letter, it's going to have all the rates, all the numbers. We'll be able to go through it together. And then it's going to have some conditions that we have to satisfy. So what are conditions? Things like income. We've stated that you make $50,000, so now we're going to show them that you in fact make $50,000 by providing pay stubs, an employment letter. We're going to provide history, 2 years, T4s, if you're self-employed, T1s, right? And the lender's going to analyze all that information. And once we've satisfied all the conditions, you can go ahead and waive financing, right? Usually, I think we communicate very well, you and I, and sometimes I tell her, look, I'm very confident, I've looked at the information, you can waive the financing, but sometimes clients want us to submit the application, have the lender review all the documents, and come back with an approval, so now it's solid, you can waive your condition of finance, right? And some lenders are very quick to get this process done. We normally ask for about 5 to 10 business days. I've had a lender, most recent, submit a deal on Friday morning. The deal is complete by Monday evening. That was unbelievable even to me, right? So we'll satisfy conditions. Now your lawyers receive documents from the lender as well. You're going to arrange for home insurance. You'll meet with your lawyer before closing day. You'll sign all the documents. And the lawyer is going to register you on title and transfer the funds. Everybody gets paid out. So on your day of closing, you're not signing any documents. That's already been done, right? And one thing that I really want to emphasize is number 9. Please don't make any changes to your income. Don't go out and buy a car during this time. There's nothing worse than seeing a big change. Somebody goes out and buys a car and that approval is gone bye-byes, right? So you don't want to make any changes. But again, you know, I'll stay in contact with my clients and make sure they fully understand that as we go through this. And of course, then the home becomes yours. Congratulations, you're a homeowner, okay? So why do you deal very quickly with a mortgage agent versus your bank? I work for you. I'm going to give you a lot of choice. right? We deal with more than 50 lenders. You don't need 50 lenders. You just need the one lender that checks off all the boxes that you may have, right?
It's not like a one size fits all.
No, not at all.
Right? Like internet, you do internet. You do things.
Absolutely. Yeah, look, in some lenders, for example, if you're buying an older home, so let's take First National, MCAP, MCAN. What they actually do, there's a warranty they provide on that home. They give it to you free of charge for the first 6 months with MCAP. First National, MCAN, it's 1 year. And it covers things like your HVAC system, your electrical, your plumbing. So you can have an inspection done on a home, but you move in, something goes wrong, at least you've got that warranty to back you up. They cover up to $10,000 annually for incidentals, right? So that's just a bonus. But some clients come to me and they say, well, I want to pay my home off quicker. So prepayment privileges matter to them. There's some lenders that will allow 15%, others will allow 20%. I'm immediately going to isolate the ones that allow 15 and go to all the ones that allow 20, right? An online portal, customer service, all of these things. Flexibility. If you wanted to pay out your mortgage sooner for some reason, right? Not just sell the property. But I have a lot of clients that call me recently. You know, we want to change homes. It's not suitable for me to be with this lender anymore. How much are the penalties that you're going to pay, right? Monoline lenders tend to have lower penalties than the banks as well. So this is very important. This is why, I advise everybody to use a mortgage agent, someone that's been doing it, someone that actually cares about the client, that's going to work for you. A mortgage agent should be asking you a lot more questions than you're asking them, right? Getting to know you and finding out exactly what your needs are. So what's next, of course, is, let's get talking. Let's get some mortgage applications. Let's have a discussion and give you all the information that you need so you're ready to go out and shop for a home with knowing exactly how much you qualify for, okay? Just a little bit about myself. So like I said, I've been in the mortgage industry for quite some time. I do all kinds of mortgages with TMG. TMG is nationwide. Great agents, family-owned company, been around for about 35 years. Husband and wife started the company. I work for TMG Ontario, or the brokerage that I work with is TMG Ontario. Wonderful people, incredible. You're gonna get ongoing support. We're gonna stay in touch on a regular basis, and that's what I offer you, right? And you don't have to deal with me, but deal with the right mortgage agent, and I look forward to the next steps.
Okay, let me say thank you to you, Frank, for coming to this seminar to be my guest.
Oh, my pleasure.
So we learn a lot, and like I said, every day we learn something. You see how the market changes all the time? So that's very important. So now, if you have any questions, so you're here.
I guess my only question is,